Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Returning guest on the program today, Lobo Tiggre. You might know him under the pen name Louis James, founder and publisher of Speculator.com. Lobo, thanks for coming back on the program, and a big congratulations on the successful launch of Speculator.com.
Thanks a bunch, Colin. It's great to be back. And it's great to be live with a new product I'm proud of.
Excellent. Well, let's start there and talk about it real quick. People might know you from, for some time, working alongside Doug Casey, writing, his premium newsletter that involves more of the junior stocks. And Casey got picked up by Stansberry a couple of years back. You were working under Stansberry. You've now decided to go independent, and I assume quite a bit of that is to have full control of content and full communication with your readership. Do you want to discuss kind of what your aims are on this new newsletter?
Sure. I'm happy to do that. And I want to start by saying that, I started in 2004. I've been with Doug for a long time, so I have a great deal of loyalty to Doug and appreciation for all that he taught me over the years. Great guy. And a lot of people kind of assume that, the Stansberry thing and the larger business is why I'm leaving. And that, not really. It is and it isn't. It's not a personal problem. And actually, the people that I work with there are very professional. And I even learned some things that made me a better writer from Porter Stansberry himself. I would go so far as to say that. So I think a lot of people may have a wrong idea. I have a great deal of respect for what those people do and their way of doing things, but it's different from my way. And what you hit on a couple things, and one is that I couldn't correspond with my readers, which personally that just was difficult for me. And many of them I'd known for years, and it was an issue for me. And the other thing was that I was not allowed to invest in the things I was writing about. Now, I understand the reason for their policy. I'm not even criticizing the reason for their policy. But I believe we're about to go into another major upturn in the resource sector. And Doug agrees. And I'm not an everybody follower, but it's interesting to me that all the people I know and really respect in the business, they all think the timing is great for this. And I want to be able to benefit directly. I don't want to just write about it. I want to do it. And my readers have always told me they preferred it when I could put my money where my mouth is. So that's a big part of what I'm doing and why. I want to invest. I want to benefit. I want to make money on this cycle alongside with my readers. And that's why I've set up the new business.
Excellent. Well, Louis, or Lobo, I should say, I want to talk to you about the process that you go through. You have the most rigorous process I know in terms of putting a stock out to your readership. You always visit a site, you're going and meeting with management, you're looking at a company for months and months on end before you make a decision. And part of the reason we're talking today is a company that we're invested in, Mexican Gold Corp, as the largest shareholder, you've taken a pretty close look at, and you haven't recommended it. You don't want to give out any of your recommended picks on this free radio program, I understand. So you suggested that we kind of go through on a case study and talk about what you would look at in a company like Mexican Gold. Do you want to kind of go through that for us?
Sure, and I appreciate your highlighting the rigorous nature of what I do, and that's really important. It's critical to me. I mean, I'm going to put my own money in this now, right? So if I'm going to put my own money in there, I damn sure want to be taking off all the boxes. And it starts with the 9 Ps that Doug Casey taught me, people, price, financing, paper, politics, all that good stuff. And as you say, I like to proof the story. It's not enough to just go through the company's website. It's not enough just to go through the financials on SEDAR or EDGAR. I want to go and meet the people, because the best rocks in the world, even if it all makes sense, great story, everything was good, if you have the wrong people running the project, then you can still screw it up. That's a technical term there, screw it up. So kicking the rocks it wasn't by design, but it's become sort of the hallmark of what I do. I like to go and proof, and there's just so much that you get on the ground that don't get from any other source. Like, even if all the numbers are true and management hasn't, hidden anything or misrepresented anything, the numbers don't tell the whole story. And you may see when you go visit a town in Colombia, for example, that the locals are protesting. So this brings us to, and you won't find that in the reports, or you may go and meet the people and find out that these people are all very young. They're just out of school. They have no experience. You won't find that reading in the presentation. So I've had Mexican gold on my radar. You brought it up. And frankly, at the beginning, I wasn't too sure. It was just one of many exploration plays. And then the sampling and drill results that you've had now are starting to show some more significant thicknesses of higher grade gold out there. And I have to say that caught my attention. So I had a closer look, and it's gotten to the point now where I think I probably need to go down there and start kicking the rocks and verify the story. And it's interesting to me. It's not just a verification. It's also an understanding. What Mexican gold has could be like really fantastic, or it could be not so fantastic, depending on the realities on the ground. It's multiple zones. It's underground, but kind of accessible through these canyons. Doesn't look like an open pit, but maybe a block cave underground scenario that could work out really well. You could access it from the valley bottom, but are the rocks of the right type? You start getting into the technicalities, and the devil being in the details. And you're never going to get all that stuff in a corporate PowerPoint. You have to go and talk to the people and ask them the hard questions and see what they say. So I would say for the people that have been listening to your show for a while, and obviously you've talked about Mexican gold, it's interesting to see how your story has progressed. And it's interesting to see how, you've gotten to where you're starting to deliver a fairly consistent tenor of results. And that says something about your work. Predictability is the holy grail, of course, in exploration. If you have a model and it tells you where to drill and what you're likely to hit, and that's more or less what you get, then you know it's really starting to come together. And that's the sort of progress that makes me want to put my boots on and come have a look.
Excellent. Well, that's very helpful. Let's kind of go from small details out into the bigger details. So my next question for you is, when you're modeling, when you're modeling a portfolio in the resource space, how many companies do you push your readers to diversify across? Obviously, the business is fraught with risks that you can't quite always control. So you've always been a proponent of not putting all your eggs in one basket.
Absolutely. And if it sounds so simple and logical and such a no-brainer, but people fall in love with their favorite asset class. We call some people, we call them gold buds, and some people say it with pride. For some people, it's a pejorative term. We don't need to attach religious significance to the term, but it is important for people to think about their own psychology. If anybody calls me a gold bug, what am I doing in my portfolio? Am I 99% in gold stuff? That tells you something. So, and you look at the macro picture, and sometimes it's bullish for gold, sometimes it's not. It's good to be diversified. And you look at your own self, and you make mistakes. Even if you're sure you're right, you don't want to have all your eggs in one basket. We're hitting on well understood, everybody knows this kind of headline one-liners here, but people know it and forget it. So it's important to say that. So what do I do? What do I tell people? First and foremost, one size doesn't fit all. Second, absolutely diversification. In my own case, I am looking at the crypto space and the new technology out there. There are, Casey had me focusing very much on the metals and mining. That was my mandate. But I have interest in other areas. I've studied in other areas. And I want to be able to diversify beyond one area, because you can always be wrong. But even for people that are very focused on resources, the easiest diversification is to not have all precious metals, but to also look into other commodities. And right now, looking at the macro picture, that's a really good time to diversify in this way. It's kind of a win-win scenario where the super cycle of all commodities is curving upwards. That's good for everything. But just looking at the macro picture, you've got scary headlines and good headlines. And how do you deal with that? Well, if the scary headlines are good for precious metals, if North Korea is saying, oh, we can hit California now, oh, well, that's good for precious metals. If North Korea is saying, oh, well, now we're turning into doves, we're going to hammer our missiles into plowshares and make up with South Korea, well, that's not so good for precious metals, but it's good for industrial metals because the receding threat of war is good for business. Business booms. The basic message is basically yes. Diversify. Find your own interests. Find out. I can't tell you that you should be into technology as well, or you should be into agriculture as well. It's better for you to say, what am I interested in? What can I learn about? Because as a speculator, you really need to learn and understand the areas you're speculating in so that you can have the confidence to stay the trade. If you just do what other people tell you and prices go down, you can get spooked out of a perfectly good trade. But if you understand why you speculated in a certain area and prices go down, you might just buy more. There's a very never to be underestimated importance of playing to your strong suits. And I think that's the key to diversification successfully.
Well, a peculiar phenomenon I just thought about, not necessarily uncommon, but you mentioned that we're broadly in a commodity bull market. And last year highlighted that, where most of the commodities went up. Some of them went up quite a bit, but most of them went up at least a bit. However, the associated junior resource stocks, I mean, if we just look at gold, there were picks in there that did very well, but as the saying goes, when the tide rises, all boats move up. Well, that didn't happen last year, and very few companies went up, even though the commodities were moving up. Does that kind of play into your thesis on an imminent move coming in the resource stocks, potentially?
Well, I have to bring Rick Rule in here and say you never want to confuse inevitable with imminent. It's great if you know that something inevitable is imminent, but you should never be so sure that something must happen that you convince yourself that it's about to happen. That's very different. The market can remain irrational longer than you can remain solvent, is the other old adage, and these are worth remembering in a situation like this. But not to waffle out on answering your question, I think there are a couple of situations where you get these, what you're describing is kind of what we call an alligator jaw pattern, right, where prices diverge between the equities and the underlying commodities. The underlying commodities are going up, and on average, the equities haven't risen as much or at all on average, and that's an alligator jaw opening. If, on the other hand, you have a situation where the prices of the underlying commodities are falling and the equities are holding up, that's a much scarier alligator jaw to put your hand in, because it's more likely that the equities will fall to meet the underlying commodity prices than what we're looking at now. So what I'm saying, anytime you put your hand in the alligator jaw is kind of scary, and that's good. As a speculator, you should be scared. You should be worried. And that drives you to do the most thorough due diligence you can and make bloody sure that you're making a good bet, or you've got the odds as much as you can in your favor. And what I'm saying is when you have the situation where the underlying commodities for resource speculation are going up and the equities aren't, you have a divergence between value and price. And that's a good thing. The value is higher than the price. That tells you you've got a chance at a bargain as opposed to overpriced. You don't want to buy overpriced and hope that some greater fool will come along later and pay even more for what you bought. You want to buy something that's underpriced because the odds are that the price will come up to meet the value in time. Now, when exactly that happens, I don't know. A big breakout in gold would certainly help, or even a big discovery could help. But it could happen completely on its own. It could come from the outside. A Tesla beat, for example, could renew enthusiasm for the electric car battery way of looking at the market and all the minerals that go into electric batteries and so on. Or a big new successful deployment of a solar and battery combination like the one in Australia. Those kinds of things could spur the market. But if not, those are the kinds of things that could send it up in the near term. If they don't happen, at the end of the day, if you have the value increasing, the price has to come up to match it.
Let's look at the price of gold. If a gold bug's overly focused on the daily gyrations of gold price, they might get a bit frustrated the past couple months. This thing is getting hammered down every time it gets to 1340 or 1350. But if you take a 1-year chart of gold, I mean, wow, it's just a beautiful chart. It looks like it's ready to take off. And like you just pointed out, it's almost impossible to time things. But, you know, it's kind of interesting being in this market where these resource stocks are beaten down. However, unlike saying that 4 years ago, it seems like there's really just this moment could come at any point where things just start to take off.
Yeah, I agree. And the first thing I have to say is, you know, $1,300 gold. How is that a bad thing? When I started with Doug, it was $300. And, you know, we were thinking $1,000 gold would be so great. We'd be popping the champagne bottles and everything. And now people are unhappy because it's down to almost $1,300. The better mining companies are making money today. The better projects are feasible and look like, you know, not look like, the better projects with the feasibility numbers that show that they can work at even $1,000 gold will go forward at today's prices. So there's nothing wrong with gold today. And the drivers are what they've always been. You have the fear aspect and the safe haven aspect. You also have the commodities aspect. You know, gold, whether gold bugs like it or not, still trades as a commodity. And you have the super cycle aspect, which is bullish for all the commodities. All these things are going in there. And the short-term fluctuations just don't mean anything. I tell you a true story. And this is absolutely true. I woke up this morning and I saw that gold had taken a pretty steep plunge on the one-day chart from Kitka. And I was happy. Why was I happy? Because there's a stock I've been wanting to buy. And it's been stubbornly like just above the price I set for myself where I wanted it to be. And I thought, this is a great day for me to put my bids in. I don't know yet whether I had my offer filled yet, but I set a limit order in today, and I was just so happy to see this daily fluctuation because it doesn't matter. It doesn't change the underlying profitability of the business as it is now. So gold bugs of the world, take heart, right? You know, use that volatility to your benefit and understand that we are in a gold price environment now that is actually a good price environment. There's nothing wrong with gold here. And if any of these black swans that we talk about out there add the safe haven turbocharger on there, then we'll all be even happier. I got to say one more thing, though. You know, we talk about gold bugs, but silver is sometimes the unloved, you know, poor stepchild here. I really like silver a lot because it moves with gold. There's no question that when gold goes up, silver goes up. Doesn't matter whether silver is in surplus or deficit from the mines. It responds to the price of gold. But it is also an industrial metal. And not only is it also an industrial metal, it's also part of this solar/battery/new energy paradigm. Those solar cells out there use a lot of silver. I have a friend in Silicon Valley who asked, you know, sources in Tesla, and I understand that a Tesla solar shingle uses about 1/3 of an ounce of silver per shingle. And the conventional panels use even more. The average single-family home in the United States uses more than a kilo of silver on its roof to go solar. That's a lot of silver if a lot more people switch to that technology, which the new batteries are starting to make more practical. You know, before it was just diehard environmentalists wanted to go solar or people with no power at all. But now that you can have a battery so you can have electricity when there's no sun, and you can have free energy from the sun instead of energy in a high, you know, price market, it actually makes sense in places like New York or whatever to go solar. And silver is a big part of the story. I think a lot of people miss that silver is an energy metal. So it's an energy metal, it's an industrial commodity, and it's a precious metal. So if we have, you know, peace with North Korea and the world economy rebounds because they're optimistic, well, that's bullish for silver and the industrial metals. If we have Kim in North Korea changing his mind and, you know, scaring everybody again, well, that's good for precious metals, which includes silver. So I'm you can call me a silver bug this year. I see a lot of win-win optionality in silver.
Great. Well, Lobo, I want to congratulate you once again on the launch of independentspeculator.com. and I hope for much success with your business this year, and also I hope that our feelings for a strong commodity market and strong market for junior resources comes to fruition at some point soon. You're absolutely right on the price of gold being in a good spot and this being good buying opportunities. The dilemma always being that gold bugs don't always have cash aside to buy more stock when it gets cheaper. But yeah. Anyway, I want to thank you. Thank you again for coming on the program today.
Thank you, Colin. Pleasure to speak with you.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?